India's merchandise trade with EU in 2024-25 was described as being nearly about $136 billion. India, as of 2019, only accounted for about 2.3% of EU's imports. India also wants to diversify its exports markets away from the US. So the big question is this actually a win for India? India and the EU have concluded a long-awaited free trade agreement, or an FTA, and it's a deal of all deals. It covers two large markets, the India and the EU. And if it's been implemented well, it could meaningfully reshape how India's export opportunities open up, along with getting access to significantly high quality materials and vehicles amongst other imports from the European markets at potentially a lower cost as well. So the big question is this actually a win for India, or does it mainly just open up India's protected sectors to more competition and potentially hampering the growth of those sectors while still being beneficial for consumers? We'll look at all of that today's video, so let's get into it. So overall, India and EU's trade balance has swung from being more or less flat in 2019-2020 to upwards of about $15.2 billion in surplus in 2024 and 2025. A lot of that was driven through exports rising to nearly $76 billion, and the imports that were coming in from the EU were hovering at roughly around $60 billion. So the India-EU trade has become large, and it's potentially getting larger. India's merchandise trade with EU in 2024-25 was described as being nearly about $136 billion, with services accounting for about $83 billion. So this isn't a small partner deal that's happening. It is a moment when India also wants to diversify its exports markets away from the US, and the EU is also looking to reduce its strategic dependence that has existed for many years on the US markets, and is looking to expand in fast-growing economies. So what's India's biggest upside? Well, Europe is a high-income market where potentially small tariff cuts can also result in real competitiveness and much higher volumes for the Indian players, specifically when we compare them versus other rivals like Vietnam and Bangladesh. So what are the trade terms we're looking at? When the FTA enters into force, it's being reported that about tariffs on about nearly 90% of Indian exports to the EU are being eliminated completely, with key categories seeing day one tariff removal such as marine products, chemicals, textiles, clothes, gems, jewelry, base metals, many consumer goods, etc. And historically, Indian exporters have lost out on orders from the EU, not necessarily due to quality issues, but more due to the price issues arising from these tariff disadvantages, and also due to compliance frictions as a result of EU's strict norms. India, as of 2019, only accounted for about 2.3% of EU's imports, and that has risen very marginally to about 2.9% as of 2024 and 2025. So there are some clear sectors that are expected to win here. We spoke about clothes and apparel. Their tariff elimination reduces India's disadvantages versus countries that already enjoy preferential access to the EU. Marine products, again, lower tariffs from EU can help diversify us away from tariff-heavy markets like the US, and also deepen the value-added processing that we're doing here. Jewelry, diamond, gems, tariff cuts here can help scale the industry where the margins are already quite thin, and speed also matters. Another industry is chemicals and plastics and rubber. Many of these broad-based Indian exporters look to gain given the zero duty access that is going to happen to the EU markets and the improved competitiveness that will happen here as well. And finally, pharmaceuticals. Europe is already a big, importer of pharma products, and it also already absorbs significant amount of Indian pharma products in significant volumes. So reduced friction, better access to the markets can significantly expand the opportunity of pharma products as well. Beyond just goods, we're looking at also services that could benefit in the longer term. India has secured deeper EU commitments across 144 services subsectors. This includes IT, tech, professional services, education, and many other business services. Now, in the long term, this could translate into easier contracting, fewer discriminatory barriers, smoother mobility for skilled professionals from India to the EU. It also strengthens one of India's most globally competitive markets and sectors, which is the tech sector and the services sector in general. Unlike products that can sort of dramatically change in terms of overnight exports, services in these sort of FTAs tend to be more longer term horizon and give the benefit over a longer term horizon due to benefits coming in through less tangible means such as ease of rules and regulations, more recognition, less uncertainty, etc. And typically the winners here in these sort of services market, like we said earlier, will be large IT players, followed by mid-sized consultancies, engineering services, specialist providers, etc. Provided the compliance, the data standards, the data requirements can be met for the EU markets as well. Now, naturally, all of this has great benefits for the Indian markets, but an FTA is not a single one-way transaction. India will have to reduce tariffs on many EU products over time, and some of these are politically and also economically very sensitive for the Indian markets and the Indian diaspora. So autos is one market that has been the classic sensitive sector for India, and India has historically protected the sector through huge tariffs to push more local assembly, more local manufacturing. EU car tariffs are also expected to sort of fall sharply as part of the FTA, specifically for premium vehicles with a quota of around 2.5 lakh vehicles. Domestic car manufacturers and OEMs may also see limited near-term pressure because many European brands already assemble locally and the duties are comparatively lower in that case. The quota is also small relative to the overall Indian passenger vehicle market. So over time, however, the luxury market could expand as the bigger duty cuts is there for the expensive cars, and EU's premium brands could actually bring more models without deep localization for India. The other sector here is consumer imports, wine, beer, processed foods, medical equipment, etc. There were many sort of import side consumer wins from a tariff perspective, elimination perspective. We also see many cuts coming in for optical, medical and surgical equipments, machinery, electrical equipments and many other industrial goods. So there is a pro and a con here. One is on the pro side, the advantage is you get access to cheaper capital goods, more advanced inputs, which can ultimately reduce the cost for Indian manufacturers. It can improve productivity, it can improve the level of the technology that's being built in India as well. And India's government explicitly has framed the EU high-tech imports as a way to diversify from other sources such as the US markets and also reduce their input costs as well. The disadvantage, the real con here is, however, for domestic producers that were specifically manufacturing most of these capital goods and products, and these are typically might be the smaller scale or the less efficient ones, and those are the ones that could face stronger competition and may not be able to diversify their product lines to sustain what's coming. Beyond just how the EU can benefit, there's also the issue of standards and compliance from an EU perspective. Even with, let's assume, fully zero tariffs for across the board on goods and services, EU's non-tariff requirements through traceability, sustainability, reporting, transparency in supply chains, quality standards, all of those can actually determine who actually benefits. Another big issue for the EU market, for instance, is in something known as the carbon border adjustment mechanism. It's something that has an impact on carbon intensive exports such as steel, aluminum, and many Indian firms have not been able to get an exemption for the CBAM. So all of these guidelines and policies matter because it means our competitiveness in certain industrial level exports is not just dependent on these tariffs, but it's also dependent on having credible decarbonization, strong measurement systems, strong verification systems, etc. So the FTA can open the doors for India, but exporters really need to meet the compliance requirements, and if they don't, then they may find EU is not really operational for them. So is the India-EU FTA agreements really beneficial for India? Well, on the balance, yes. And that's primarily because of three things. One, many of India's strongest sectors such as labor-intensive goods, services sectors get much better access to the EU market, which is typically higher income, a much larger market, where India has typically had relatively low share, up around about 2.5 to 3%, meaning that there's significant room for growth and significant profits can be made. The second reason here is that most of the India's sensitive openings appear to be more phased and in a managed way. For instance, the auto markets have quotas of about 2.5 lakhs for the premium segments. There will be gradual cuts that will come in. There's limited immediate disruption that is expected for many of these sectors that are opening up for the EU markets. Third is that we get access to cheaper, much higher technology inputs and capital equipment and heavy, large equipment, which can improve not just India's competitiveness on the overall supply chain basis, but it also improves the skill level that we're sort of bringing in from a manufacturing perspective, from building these networks of manufacturing ecosystems over time. However, as with all things in India, what really matters is if we can execute and implement well on a lot of the unglamorous parts of this deal. One is helping companies, large, small, medium, everyone to sort of be able to be compliant with EU standards and norms. Second is building strong testing, certification infrastructure internally so that we also have those standards being upheld in India. Third is preparing for this sort of decarbonization policies that are coming up, not just in the EU markets, but in other markets as well, by potentially investing in more greener, sustainable industrial processes. If we're able to do a lot of those things well, the India-EU FTA can be more than just an MOU or a document that was signed, but it actually starts bringing in a lot more value for the Indian markets. It can be a practical way for jobs in export clusters such as textile, leather, gems, marine, services, higher value manufacturing, services growth, and that's how we can sort of improve our employment. However, if we're not able to sort of really take value of the FTA, then what we'll see is major headline tariff cuts as we see more cheaper European imports coming into India, while India's export markets are not able to really gain significant ground in the EU markets. And that's something that time will tell now. We hope you enjoyed today's video. If you did like it, do let us know in the comments what else you want us to cover. Do like, share, and subscribe. Thank you so much for watching and happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.